Good afternoon, good evening, everyone, wherever you are watching me from. This episode, we are going to talk about these 4 key things that you see on the screen over here. These 4 key things: top-down analysis, entry of the market, stop loss setting, profit maximization. Now, there are so many things. I always say, we the beginners, some of the intermediate traders, even some of the professionals, they know their way out. But when it comes to the intermediate traders and the beginners, how we do analysis, I always tell myself, there is a reason for everything. There is a reason for everything. You hear most of the people saying, when you want to do analysis, you're supposed to start from the daily time frame. Others prefer the weekly time frame. Others also start from the monthly time frame, and then lastly 3 months time frame. When we look at mother and a child, or a father and a child, or parents and children, the children came as a result of what? Or the children came through the parents. So in this scenario, we are having the lower time frames, the 1 minute, the 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours daily, weekly, monthly, and 3 months, in that order. Now, to me, if you want to do a top-down analysis, a proper top-down analysis, to have a good overview of the whole market, to me, you are supposed to start from the higher time frame, the last higher time frame, to have a general view of the market. Then you scale down to the lower time frames. You look for your entry positions. So in this video, we are going to learn how to do a proper top-down analysis. In the course of doing the analysis, we are going to make use of some concepts. We are going to use trend lines as well. Also look at major key areas, fair value gaps which attracts liquidations, order blocks which attract liquidations, so that you know where exactly smart money are turning the market to, and where you are supposed to look for your entry. The things you must do, simple entry criteria you must apply to enter the market. So without much ado, guys, this is DFA community. If you haven't subscribed to the channel, make sure you subscribe to this particular channel for more educative content. Let's jump into the video. So now the first thing that we are going to tackle is top-down analysis. Before we look at the entry of the market, we look at how we are going to set our stop loss, then also maximize profit, taking partials of profits, and also leaving trades to run to hit our full take profit areas. So now, without much ado, let me just do away with these items over here. So now, if you want to do a proper top-down analysis, let's use BTC USDT. The reason why I prefer a current market chart is that you know what is going on. So as you can see, the market is still moving up and down. This market has not been closed. This is a crypto market, a Bitcoin. So now let's go to the 3 months time frame. If we move to the 3 months time frame, if you want to do a proper top-down analysis, please come down to the 3 months time frame. And this is the 3 months time frame. If we are to open it up, this is the whole 3 months time frame, what is showing us. And if you check down here, we are having some year dates over here. We have 2018, 2020, 2022, 2024, 2026. So The 3 months time frame gives you 2 years interval of the years. So it means from here, this particular candle over here, which was October 2017, we moved to 2018. This is January 1st January 2018. So here from 1st January 2018 we moved down to this particular area 2020. So how many candles do we have here? 1 2 3 4 5 6 7 8 9 candles, forming to have this 2 years interval from the 3 months time frame. If we are to use some of the concepts or analysis tools such as trend lines, we can draw a line from here. You can draw a line from here to connect these key areas. And guys, if you want to draw a trend line, make sure you put the line on the wick, not on the body. So as you can see from this particular trend line, we are having, let me even connect this support area here. We're having 2 key points or 2 key areas that has touched the trend line. So this particular trend line, we can refer it to as using the concept of trend lines as tentative. So we can say this trend line is tentative. So a line is, what do you call it? Before we can get a line, we have to get 2 points that we can just connect using a line to have a trend line. So we are having 1 point here, another point here, and another point here, having this particular line. Or better still, if we are to just draw it, or let's put it on this wick. We can put it on this wick, over here, on this wick. It's not giving us the exact, so let's put it here. Assuming this was just a false breakout, sweeping liquidity below this candle over here. So now having this, now we have our tentative trend line. So before we can say Bitcoin is actually in a higher uptrend or is in an uptrend, it has to touch the trend line 3 times, bounce off, and just move to the upside before we can say we are having an uptrend. Before we can say we are having an uptrend in Bitcoin from the 3 months time frame. Okay. If we scale down to the lower time frame, normally I prefer to zoom it out. Prefer to zoom it out like this. So we are having our tentative trend line over here. So now let's go to the monthly time frame. So if we come down to the monthly time frame, that is how we see everything from here. So we are having first touch here. This was a false breakout. We are having a second touch here, bouncing off the trend line. So we are speculating, or we are waiting before we can say we are having an uptrend, a serious uptrend. Price has to just touch the trend line the 3rd time and bounce off again. So currently we are having a tentative trend line. So it means that hopefully Bitcoin this asset can just shoot up once more, crossing the 100,000 plus or 100k price level. So this can potentially touch the trend line and bounce off once again. So that is it. So now let's move on. Coming to the lower time frame, where we are going to have our entry exit. So you must start your analysis from the higher time frame. So knowing this, that now Bitcoin is in an uptrend, breaking a higher low, higher highs and creating higher lows. you know that it is an uptrend, but before it can be fully confirmed as a serious uptrend, it has to touch the trend line the third time and bounce off. So we are speculating for Bitcoin to hit the trend line the third time, then buyers will take advantage of it. That is the concept of the trend line. If it was in a downtrend, we are going to take advantage of the sell side as well. But before we take a buy, we must wait for buy side liquidity to be swept before we take the buy. So now let's move to the weekly time frame. When we scale down to the weekly time frame, that is the whole overview of Bitcoin. So as you can see, we are having structures being broken. We are having structures being taken out as well. So we are having break of structure, creating a market shift. And always, guys, anytime price breaks a structure, it comes back to retest. That is the algorithm. That is the algorithm of what? The chart. It runs through all the charts. That is the algorithm. So now let's draw another line over here as well. So we are having a break of structure over here. So it is assumed price will just move to the upside and come back to retest the structure again. So that is it. So now we are having a serious break of structures over here going on. So now currently, if we are to draw or if we are to trade this particular setup over here, now as you can see, we are having this particular item over a break of structure over here. People also trade using chart patterns. Some will prefer to just use patterns as well. Some will prefer to use patterns at this particular area. So you can say there is also a flag over here. We can treat this as a bullish flag over here. So the concept of chart patterns, anytime price breaks a pattern, it comes back to retest. It will come back to retest the trend line. So it is assumed price or BTC will come down to just retest this trend line before it will bounce off once again to the upside in that order. So knowing this, what we are expecting is that when we scale down to the lower time frame, we are going to look for retest trade. We are going to look for retest trade. So knowing this, as you can see, if we zoom out this particular candles here, breaking this pattern over here, this bullish flag over here. So as you can see, all that we are speculating is to wait for price to come back to retest this pattern that was broken. So in our mind, we are looking for sell opportunity in the lower time frame. Sell opportunity. Now there are so many concepts that is going on, such as CRT, candle range theory. So if we are to use the candle range theory to confirm our sell side, let us put this trend line on the wicks in the right manner. Okay, good. So to have a sell side opportunity, we are looking for an opportunity to sell, and that will be a retest trade of this particular break of pattern over here. So all that we are looking for is sell opportunity in the lower time frame. Now let's go to the daily time frame. If we go to the daily time frame, what should we expect? Before you jump into the trade or before you take the sell opportunity, guys, you must always think about market structure. As you can see, there is a liquidity pool over here where we are having this line, a liquidity pool over here. So potentially price or BTC can retrace back to this particular zone, can retrace back to this particular liquidity pool over here before it bounces off once again, or it can even cross it to touch the trend line, the higher time frame trend line that we have just drawn. So as you can see, let's look at the structures going on. So now here, what you're going to consider in the lower time frame is market structure, change of direction, market structure. So if we are to assess this this particular market over here, we had a run over here, a lower high, sorry, a higher low over here, a higher high, we had a higher high, we had a higher low over here, we had a higher high over here, we had a higher high over here, then we had a higher low over here as well. Once again, we had a higher low over here, then we are having the last higher high over here. So what we are expecting is, we are expecting a change of character to break the last higher low. So as you can see, price is choppy over here, price is choppy at this particular area here. So this is the last higher low over there, and I'm going to draw a line over there. I just want to clear this market structure markings. So we are looking for a sell opportunity, and this is a retest of a retest trade, that we are just coming to take. So to me, this particular higher high, and this is the last higher low, and price has not breaking, or price has not created any higher. So this is the last higher low that we are having over here. So we are going to target price over here. If price breaks the last higher low over here, retest before we take a shot to the downside over here, to this particular liquidity pool over here. So what we are going to do, we are going to take a shot from this particular region. We are going to wait for price to break this last higher low, retest it, then we scale down to this liquidity pool over here. Now let's move to the 4-hour time frame. If we move to the 4-hour time frame, let's clear these zones here. So what we are going to do is to wait patiently for price to break this line, over here. And guys, here you are going to wait. You have to wait for price to break this trend line here, to break this line over here, or you can even draw additional last higher low from this particular area here. So as you can see, price has failed to just create a new higher high over here. So it has started creating lower highs, gradually. So you're going to wait for price to break any of these lines, then you take a shot to the downside. You take a shot to this liquidity pool over here. So that is a massive trade that we are expecting Bitcoin to have, a massive trade. And guys, it is accumulating. Anytime you see price ranging in this manner, it means there are bank orders, there are huge orders that have been placed in the financial market. The banks are making orders. When you see price ranging in this manner, consolidating in this particular manner, it means the banks are taking their positions. There are big orders coming into the market. So you're going to wait for the decision of these smart money people, these big banks, to take their position. So all that we are speculating is to wait for these big money players to break out of this consolidation, to break this last higher low zone over here. If they break out of this structure, then retail traders will join them. They will also short to this particular zone over here. So that is how to do a top-down analysis. So in 2025, before you take any trade, start from the higher time frame. You will know the overview of what, or the bigger picture of what is going on in the market, or all these years, what has been going on. So we are waiting for these big players to just break these structures for us. Then retail traders, we join them in that order as well. So guys, this is how to do a top-down analysis. So with your stop loss setting, if it breaks this particular structure, retest it. So you're going to put your stop loss. Now, to me, you can have a very tight stop loss without you being taken out. And before you enter the trade, make sure after the retest, wait for the last candle to close. Candle closures, wait for the last candle to close before you jump in, and that last candle must sweep a liquidity before you jump into the trade. You short to the downside. So thank you very much. See you in the next video. And with your profit maximization, I forgot to hint on that. With a profit maximization, where you want to take your entry, you can take your entry from the 4-hour time frame, or you can scroll down to the 15-minute time frame. To me, having this idea overview, if you want a huge profit, you can target the higher time frame, such as the 4-hour time frame or the 1-hour time frame for your entry positions. So here you're going to mark out your major key areas inside the 4-hour time frame, and this will be your profit take levels, or your levels that you're going to take. You're going to take what you call your profit from. So now you can take your first TP from this particular key level here, the next profit zone over here, then lastly you're going to take your last profit zone over here, in that order. So guys, don't forget to subscribe to this particular platform for educative content. We have simplified content for you in the upcoming days. So see you. Bye bye.